Okay, what is up, traders? What's up, tycoons? Super excited for today's video. Coming at you guys with an update on ICP. This token has been seeing some really nice, massive rallies. Okay, right after we came into the demand zone, guys, the area where I told you guys this thing has rallied up about 60%. And we have seen a pullback. Okay, now one thing worthy of noting is we are rejecting the major Fibonacci retracement levels. Remember, I said we're not really going to be bullish until we break out past there. Okay. I'm using the 61.8, the 50%, and the 38.2% retracement levels. These are the three most common and well-respected Fibonacci retracement levels. And you use these because nothing moves in a straight line down or a straight line up. Rather, you get a move down retracement continuation of the trend or a move up retracement continuation of that trend. So that's how you spot the trend continuation, right? And so we had a very strong move to the downside. We retraced, okay? And it's very possible if we don't break out past 6.828 that we could continue that downtrend. Now, just because these are the fib levels doesn't mean that we have to continue the downtrend. You can also spot a reversal if you break through those retracement levels, right? So if you move down, retrace, and you start to consolidate and break through those levels, you can spot a potential upside reversal. So I'm going to go over the bullish price targets we have over here. If we do happen to break through, right? If you take a look, we've moved down, we retraced, we're consolidating now. And if we can flip 6.828 to support from resistance, okay, there is a chance that we could break out. Now, this red trend line here, if we zoom out, this is a very macro bearish channel that we've been trading in, right? And we've had multiple false breakouts, right? We had a false breakout here, we had a false breakout here. Now, the more times you test the trend line, the weaker it's going to get. So we want to be cautious that we don't get another false breakout and then come back down back in towards, the middle of the range. We want to see if we can actually get a true breakout and flip this to support from resistance as well. That's when we really have the chance of hitting our bullish price targets up above of 7.495, 8.181, and 9.054. Now let's go ahead and zoom back in, okay, and go back into it. All right, and really just break down, some of the key things that I'm seeing right now. When it comes to the MACD, all right, the MACD is very useful for spotting entries and exits. So let me go ahead and show you guys what I mean by that, right? Right here, we see a crossover to the downside. Here we see a crossover to the upside. Okay, here we see a crossover to the downside, and here we see a crossover to the upside. Why am I showing you this, right? You may be wondering. Well, when we get that crossover to the upside, you can see we had a very strong push to the upside, right? And when the red line crosses below the yellow line, that's typically known as an exit signal. And you see we had a strong move to the downside afterwards, okay? And here we got an exit signal, strong move down. Here we got an entry signal with the red line crossing up above, and we've started pushing up higher. Again, look exactly where we're finding resistance, guys. We wicked out up here to 6.828, weren't able to close above it, right? Now, these two times is very important, okay? Don't be fooled by the wicks, all right? Pay attention to where the candles are opening and closing. So we opened, we pushed up higher, but we weren't able to flip 6.828 to support from resistance. We actually closed directly at there. And then the next daily candle opened there as well. And it wicked up higher, but buyers weren't able to push up above and keep above 6.828. And it actually ended up forming a bearish engulfing. And we saw a large move to the downside afterwards. So that's why that level is really so important and why it's a big resistance level. Again, the more times you test the level, the weaker it's get. We tested it 2 times here. We tested it a 3rd time here. There is a chance we could break out past it, but we need to keep mindful of the false breakout to the upside of the bearish channel. Okay, that's happened multiple times, and a lot of people got fooled up here and probably ended up selling somewhere down here because they were panicking, right? That's a pretty big drop if you're not prepared for it, and you end up getting caught buying the top here. I mean, this thing fell 45% in 16 days, so just a little over 2 weeks. I mean, imagine putting, $5,000-$10,000 up here, and in 2 weeks you check back on it, it's $6,000, right? A lot of people are probably going to panic sell. So hopefully you're learning something new in this video, right? To help prevent you. Remember, trading is like going to battle. It's like going to war. You need to be properly equipped. You want to have the right weapons. You want to know how to use those weapons so that way you can increase your odds of success on the battlefield, right? And your army, okay, your soldiers are your money. Okay, so you want to put your money to work for you guys on the battlefield, and you want to make sure that your money has the best chance of winning, right? So these are some of the different things that I use to really help give myself an edge And you know, when it comes to the basics, right? I mean, these are essentially a little bit of the basics, right? We're just looking at the MACD, we're just using the RSI, and we're pretty much just using the fib levels, right? If you can start to learn those three things, then you can start to combine other things as well, such as chart patterns, supply and demand, many other things, and you know, help give yourself an edge. All right. Now, remember, none of this video is financial advice. I'm not telling you guys to buy or sell the token, but really just going over the data, right? The chart is nothing but pure data, and I'm just breaking down the data we have available, and you know, going over some of the key levels to the upside as well as to the downside, right? You know, so if we do end up getting that trend continuation and we keep projecting this level, we could come back down into this demand zone. Okay, now the demand zone here is about 4.6 down to about 4.3. All right, that's going to be your area of interest where we've had buyers step in multiple times. It was prior supply, right? So over here, we can see that it was a prior supply zone, which is an area where there's an imbalance of sell orders, right? So we came up into it, it pushed down lower. We came up into it again, it pushed down lower. And then here we broke through and we ended up getting the breakout and we retested the level here, right? So former supply becomes new demand. Old resistance becomes new support is essentially what that's saying there. We came down to the level multiple times here and saw a push. So, you know, if we do end up getting a pullback, this is going to be a high level of interest area for me, you know, to look and see how the price reacts, right? Does it continue to bounce up as it's done multiple times, or does it consolidate and break through here and potentially head lower? So that's pretty much it for today's video. Hopefully you guys enjoyed it. If you did, smash that like button, subscribe to the channel, and I'm out.